What do you make of this?
Information overload.
So I think this distinct concern is not coming out of the wood. It has been already in the media for some time, over the past 2-3 years now. So it's not a total big surprise to us, but I think a number of Chinese companies have already started to anticipate this move, and we have seen actually a number of Chinese names announcing a secondary listing in Hong Kong. So it's going to be probably a boon for the Hong Kong market. And from an equity market perspective, we believe that this news is actually also aligned with the Chinese authorities' long-term.
Is the liquidity here, though?
Well, I think the liquidity for now compared to the US market in Hong Kong is probably, to a certain extent, probably less. But that being said, it would probably encourage more liquidity going forward into this market. And I think the Hong Kong market is probably one of the largest equity markets in the world. And we are seeing also a lot of movement with the new economy sectors growing in this market. So it's going to be clearly an interesting area for investment.
Let's talk about 2022 from the buy side, obviously. 2021 was almost a write-off. Chinese equities, what are you guys looking at then for next year?
Yeah, so actually for us, the equity markets in Asia, especially in Hong Kong, in China, are actually quite interesting because we are seeing a lot of booming themes. For example, energy transition related themes is one of our key focus. Healthcare as well has been, I think, overlooked by many investors, given that the healthcare
elements of it, because it's a very crowded trade. It has been for years. The thing is, there are some perhaps ignored bits. Is that what you're suggesting?
Yeah, I think we have to be extremely selective in this market. When it comes to healthcare, obviously, but the number of investors are looking for, potentially expecting the healthcare space to be at risk amid those regulatory tightening. But we believe that those names like in biotech, life science, would be in a better position, given that they are presenting very innovative businesses, and this is also aligned with the long-term direction of the Chinese authorities.
What are the takeaways you really want to see from here, from this jobs report in particular?
I think the Fed tightening, if it's happening sooner than expected, will clearly add some pressure to a number of central banks to follow suit. That being said, I think we're also in different dynamic because compared to the 2013 taper tantrum, I think a number of Asian economies are showing stronger fundamentals, stronger external balances. So it should help mitigate some impact. Obviously, we are monitoring this very closely, but we believe that we should probably not over-panic.
I'm sure that the Fed is looking at it even closer.
Yeah, so I think for a number of economies, and especially like China, the concern is not that much about the Fed. It's really about more about like the regulations, the tightening, the property slowdown, the growth normalization. I think the same applies also for Asia. So yeah, so this is more like what we are watching very closely.
So next year, some people have told us EM manages to outperform slightly DM, and China outperforms EM. Do you subscribe to that view? Because there are many moving parts, obviously, that affect these things.
No, indeed. I think 2022 will be the year of normalization, especially for China. Okay. So we have seen, for example, those after this tremendous year marked by those regulations in China, the property tightening. Now we believe that probably the peak of the regulatory intensity is.
In fact, I guess talking very much about this point earlier, and it's about how it's going to concentrate from after regulation onto growth and getting back to business, as it were. Would you agree and subscribe to that?
Well, I think clearly the inflationary pressure is something that we are watching closely. That being said, we believe that this inflationary pressure in Asia compared to other EM markets or the developed markets is probably more moderate. And so this will give more flexibility for the central banks to support the economy. A number of economies like India, Indonesia with current account deficit may probably feel more the impact. But overall, we believe that this normalization and subdued acceleration in inflation should be relatively supportive. And plus, once again, the healthier external balance in Asia is also another, adds to the tailwind for further support.
It's certainly what they call that buffer when real rates are negative and the dollar is stronger and the Fed takes up rates, right? Those external balances, which takes us, I guess, into the other parts of EM, right? So you mentioned Indonesia and India. Both markets have done very well, in fact, right, this year. Do we then start looking at other candidates across, say, Asia EM that have not performed as well, say, I don't know, Philippines, Malaysia, and some of these other markets there?
I think it's key for us to be selective, especially with these upcoming uncertainties related to the Omicron variant,
Okay.
given that, for example, like Thailand, which is a very touristic place, may be probably at risk if we're seeing like further uncertainties on that front. That being said, there's also a number of mitigating factors for Asia overall, because if we look at today, the vaccination rate is completely different from earlier this year. It has been much more higher for a number of Asian economies and should mitigate the impact. I mean, the impact from these selective lockdowns. And also, I think if we are going to see more like lockdowns going forward, in Asia, it probably would be more selective, and we should probably not look at a full lockdown, like what we have observed last year. So those are some mitigating effects that could help actually like improve, I would say, our outlook for Asia.